We're currently in a bear market and investors are wondering, how do we tell when the bottom's in? Perhaps we've already seen a bottom, but if not, what are those warning signs that will let us know that potentially the worst of it is behind us and maybe we can look forward to the next stage of a bull market? There's a lot of questions and today we're going to unpack 3 telltale signs or indicators that potentially bottoms may be in. Of course, it's worth noting that nobody knows when the bottom's in. We only look back with hindsight and say, hey, that was the turning point. However, hopefully these are some fascinating indicators that you can use when looking forward onto the markets. First up, priced in. You might have heard the phrase that such news has been priced in, whether to the upside or the downside. Sometimes you might read news on the markets that you think is objectively bad news, but the share price or the broader market goes higher. While other times you might hear about news on the markets that you think is fantastic news. However, the share price actually ends up selling off on the back of it. Why is it? This is because markets themselves are not only functions of the actual news themselves, but it's actually a function of the positioning of either where the asset types are or the broader market is. Thinking back, some examples of that include back to say 2020, when everything had shut down, particularly those stocks that were the more cyclical in nature, that had been affected by the lockdowns, the lower growth and the lower demand. When they were reporting things were not as bad as were anticipated, we actually saw some of those sectors, I can think about the airline one particularly, that went up on the back of it despite having significant losses. However, other times, perhaps you might think of some of those mega cap technology names that report 10, 20, 30% on the top line growth. But because of the rich valuations they're trading in, unfortunately, even though they report well, it's not good enough because of the high bar and they sell off. So why is this an important factor to consider when thinking about the broader market? We know that positioning at the moment is fairly negative. There's a lot of uncertainty seeping through. And so at some stage, when bad news no longer moves markets, investors, analysts and economists might start to think, has the worst of it been priced in? We hear a lot of analysts talking about the fact that there's a mild recession potentially priced in with where we're positioned at the moment. And ultimately the markets are a function of buyers and sellers. So when sellers are exhausted and potentially sometimes it takes a blow off bottom or a capitulation type event to then move forward into the next stage. Number 2, fear. We know that fear is an interesting indicator. Markets, of course, we know try to move as logically as possible, but they're not perfectly rational. At the end of the day, emotions come into the markets, they come into every decision on the market, and every individual, every participant has emotions behind their decision. But the key focus is try to make as logically and rationally thought out decisions as possible, and that's sticking to your rules, sticking to your decisions, and trying to stick to your processes despite the fear or exuberance that can sometimes come into it. However, on the fear side, investors often use sentiment as a contrarian indicator. Often when it's peak fear, when it seems like things can't get any worse, perhaps that could be indicating getting closer to or signs of getting near a local bottom. We see here where we're currently positioned on the CNN Fear and Greed Index. Neutral at the moment. We do know that we're into the extreme fear territory just 1 or 2 months ago, particularly during that June sell-off. The question is now, have we had the worst of it? Is that the worst behind us? Or is this a bit of a bull trap, a counter trend rally that maybe is giving us a bit of a false hope, a false dawn, and maybe there's further legs down to go? I'd love to know your thoughts on that, so drop in a comment below. We've just launched a second channel too, so make sure you've subscribed with your bell notifications on as well. The third indicator, charts. You might have heard the quote that states that charts move before the news. Of course, we know that there's a fair amount of macroeconomic uncertainties right now. A lot are unresolved. We know about the inflation side. We know about the interest rate hiking cycle that we're seeing. Many central banks rising 50 basis points, some 75 basis points at a time. Of course, on the back of that, we know that lower demand is going to be something that needs to be considered. 2 quarters of negative GDP in the US side. Other concerns about, are we heading into a recession? How will central banks navigate that soft landing? But it's worth noting that markets are forward-looking mechanisms. They're not waiting to get to the depth of the economic pain before potentially moving higher. However, of course, we're not going to know when the bottoms of the economic pain is. And of course, we're not going to know that the charts have moved with a sustained rally, because you can have counter trend rallies despite being in bear markets, until we look back with hindsight. But there are 3 different factors to consider on that front. Of course, this video here is not saying that we have or haven't hit a bottom. That's up to each different investor and analyst interpretations. We all have the same sets of data, but everyone has their different perspectives based on their assumptions and their worldviews. I hope you enjoyed this video. A big thank you for joining us. For now, stay well and happy investing.